All right. So that's S&P. Let's take a look at DXY. So that's going to be this one. Okay, look what happened. See? Called it again perfectly. So we said originally when we had this drawn out, this was in green because this was demand, okay, because we were up here, all right? We tagged this demand, came up, got a relief bounce, right? Came back down, and look at this waterfall. Waterfall, break through the demand, turns into supply. We came back to this local demand zone. Again, tagged it perfectly, right? So this thing is respecting the TA. We come back, and look, we're consolidating right now, literally right at this demand zone. So what we want to see here, as long as we can't get a push back up into supply and start reclaiming, as long as we can keep consolidating down here and eventually lose this, this is a tiny piece of support right here. This could break down very easily. We see this breakdown on the DXY. Look, you're getting this move, another waterfall, nice waterfall all the way back into this demand zone. Okay, beautiful. All the macro, again, continuing to show me that we're loading up for a bullish rest of the year because all these are bullish macro indicators. Okay, so the DXY is starting to break down, and the other one, 10-year yield, right? We've been talking about. Look at this drawing. See? It's playing out how we were talking. I drew this from before. So we got this bounce off the demand, right? We broke down, came down to the demand, bounced up. This is like a complacency shoulder right here, right? So head and shoulders. Shoulder, head, shoulder. What do you get whenever you get a head and shoulders? That's a topping signal. That's a topping pattern. Okay, you get the shoulder, you get the head, which is the pico top. Then you get this shoulder to come down here, right? So the shoulder is like the rollover, the complacency shoulder. And then once you come down from this complacency shoulder, that's whenever you see this nuke, right? So you're going to see this starting to do it right now, which is beautiful, beautiful. Everything that we want to happen right now is happening. So you're getting this complacency shoulder and you're getting this red. So I had drawn it from here, but you see it coming red into the demand. Now we just need to lose this demand. Maybe we get a little local bounce from this liquidity, this little area right here, but it should be small if it does happen. You're coming all the way back down to this demand down here, okay? So we need this to turn into supply overhead, okay? But right now it's still demand because we're holding, okay? So macro, beautiful. And that FOMC meeting should have been very encouraging for everybody. Oh, another thing I'll mention with the FOMC meeting, if you guys didn't watch it. Powell kept getting a lot of questions about the tariffs and how the tariffs were going to, basically impact the economy, because that was causing a lot of sell pressure and a lot of downward pressure on markets. Was Trump was announcing these tariffs on Canada, on Mexico, on China, and the market was throwing a fit. Oh, sell off. Oh my gosh, this is bearish, because they thought it was going to increase inflation, right? So they kept asking him, they're saying, Jerome, how do you track the inflation from tariffs? How is it causing inflation? Is it causing inflation? If it is at all, what's going on with it? And again, bullish, the way I took it was, I got a question here. Can you explain how you're looking at that supply and why you think it is in that 105 to 106 range on S&P? Yeah, I'll jump on that in a second. So, wait. Why think it is in that 105 to 106 range on the S&P? 105 to 106 range. Where's that? 105 to 106 range. I'm not seeing that on here. Are you talking about DXY? Because 105 to 106 would be DXY right here. Anyways, point I was making with the tariffs. Jerome was clearly saying basically, do tariffs cause inflation? They kind of have to, but they're not really, right? Which is bullish. Basically, he's saying, tariffs aren't really causing that much inflation or as much as we thought it would. Fantastic, right? This is not a political thing. People just assume because, it's Trump. Trump has to be wrong about everything if you disagree with him, etc. So tariffs are dumb, tariffs are stupid. Clearly not. Tariffs are working. It's not causing as much inflation as they thought it would, okay? The second thing is inflation's actually coming down. So the last CPI print, right, came in cool. Inflation came in cool, this last print. Lower than expected. inflation's continuing to come down. The prices of things are literally coming down as we speak. You can literally look at the consumer economic data. Everybody, we were joking on Monday. Everybody's talking about the price of eggs. Price of eggs coming down. Oh my goodness, it's coming down. Cool. Yeah, it's coming down. Inflation's coming down. Now, who gives a fuck about what the price of eggs is? But for markets, the fact that inflation's coming down is bullish. For investors, that gets them excited. So inflation's coming down regardless of the tariffs being there. Huge. Okay. Again, another piece of confidence for investors moving down the road that now we know, okay, tariffs are in place. Tariffs are going to start having their effect. Let's continue to see what their effect is over a long enough time frame. But clearly, it's not causing this massive inflation that people were complaining about or people were afraid about. Huge, because now we can start to get risk on and excited again about the markets, so people start dumping their capital back in. Okay, so Jerome, he literally could not say that tariffs were bad. He basically said they have to have an effect because that would make sense, but not enough to where it's impacting our numbers. They also asked him about all the layoffs at the government and how that would affect jobless claims and unemployment. He said, yeah, it's a lot of people, but not enough to affect the data macro across the country. Boom, huge. Again, beautiful. So basically he's saying the things that the new administration are doing aren't really hurting economic data, at least yet, if it is going to at all. So that's big. Because, again, it's going to give confidence to investors, again, that tariffs aren't going to destroy the economy, which clearly I didn't believe they would in the first place, but people were afraid of that and the inflation it would cause. It's fine. Okay, so beautiful. All right, so on DXY, why are we calling it supply? Can you explain how you're looking at that supply and why you think it is in the 105 to 106? Yeah, so if you zoom out a little bit, it's supply because whenever we've come into this level before, we've had a lot of interaction with this price range, right? So the reason it's supply now is because we're down below it. So if we come back from underneath and retest the supply, that means that there was more supply overhead, which caused the price to come down. So if there's more supply than there is demand, the price comes down, correct? Because it has to match. So in the past, this is where we topped out at, right? We came into this supply. All right. Now there's too much supply, not enough demand. So price is going to come down. So you see the price come down. Then we retest this supply region. Same thing again. Too much supply, not enough demand. Well, that means the price is going to come down. And so then we nuked hard. Now, the reason we call this demand down here, because it's down below our current price, is because, okay, when DXY came into this region, again, there was more demand than there was supply. Well, if the demand is higher than supply, what happens? The price, it goes up, right? So then you see the price moving up. Okay, same thing again. Why is this a good supply region? Because you see there's a lot of interaction with this region. So finally, we broke through the supply. So there's enough demand to break through. And then you come back and you retest it, right? Boom, and we went up. So technically, if you didn't see that breakdown and we were just trading up in here, this would now be demand once you break through it, right? Once you break through it and come back and retest it, it's now demand because the price is moving up. So there was more demand than there was supply. Okay, so it was a good demand zone. Make sense? But now that we've broken down through it again, that means there was more supply than there was demand. The price went down, so now that's a supply region. Okay, and this is our demand because this is where we're holding. So if we hold here, that means demand is meeting supply, so it's holding. There's enough demand here to keep the price stable. Okay, so we want to see the demand go down, the supply go up, and therefore a nuke back down into here. This will be our next demand zone. This will then turn into overhead supply. This will turn into overhead supply once we break down, and we're down in here. Okay, because then we would have to eat through the supply again to get up higher, right? All right, so that should answer the question. Cool. So tariffs aren't breaking the economy, so that's good. DXY is coming down, bullish. It's hitting all of our levels beautifully.